What's up, everybody? I am Jaspreet Singh. This is downtown San Diego, and I want to do something a little bit different today because just yesterday, Thursday, the Federal Reserve Bank made an interesting statement where they said that inflation is becoming a much bigger concern and they want to raise interest rates again in May, but this time they want to be more aggressive. They want to raise interest rates by 50 basis points, which means they want to double how fast they raised interest rates in the previous rate hike. As soon as the Fed said that, the market freaked out. We saw the stock market immediately start to go down, and then people started to get worried. What does this mean about the economy? What does this mean about the dollar? Should we stop saving dollars? Should we be more worried about inflation? What's going on? What should we be doing? So I want to answer that in this video. I know this is really raw. I'm recording this right off my phone. That way I can get this video out in time. I'm in downtown San Diego. Downtown is actually on the other side of the building, but still beautiful views here. I got the sunrise over there. But focusing on what the Federal Reserve Bank said. So the Fed said that they want to raise interest rates by 50 basis points, which means 0.5% in May, and that is twice the size of the previous interest rate hike, which is why people kind of got a little worried on the stock market. And the reason the stock market fell is because when interest rates go up, business becomes more expensive, everything becomes more expensive, borrowing money becomes more expensive. Now, the first thing that I want to go over, I've talked about this before, just give me 30 seconds to recap on this because you have to understand, inflation has one root cause. It comes from the word inflate. When you have inflation, it's because you inflate the monetary supply. Now, I know there's a lot of debate as to what's causing inflation. Is it Russia? Is it the supply chain issues? At its core, inflation is caused when you inflate the monetary supply, and the entity that's in charge of a monetary supply is called the Federal Reserve Bank. Now, the interesting thing about the Fed is they're not federal. It even says so on their website if you don't believe me. They're not a reserve. They don't keep any cash reserves anywhere. And they're not a bank. You and I can't go there to deposit money. So the Federal Reserve Bank is this entity that controls our monetary supply, and they can do two things to control our monetary supply. They can raise or cut interest rates, and then they can buy certain assets. So when you enter a recession, typically what the Federal Reserve Bank will do is to stimulate the economy, they'll first cut interest rates. What that does is it makes borrowing money cheaper, because now it's cheaper for you to go out and get a mortgage. It's cheaper for businesses to borrow money and get loans and invest in the companies. This stimulates the economy. Now, again, when they lower interest rates, this creates more inflation because when you go to the bank to borrow money, the bank doesn't have all this money there. This money gets printed, and then you get the money and more dollars enter our economic circulation. So the lower interest rates cause inflation, and then you have the Fed's balance sheet, the assets that they own. The Federal Reserve Bank owns some assets. They mainly own United States Treasury bonds, they own some mortgage-backed securities, and then they own other assets. I'll go over what that means in just a second. So the United States government, this is interesting, they have like a $30 trillion national debt right now. What that means is they run a deficit. You and I pay taxes, the government gets their tax revenue, they spend all their tax revenue and then some, and the way that they cover this and then some money is they issue bonds, which is loans. Now, you and I can go and buy some of these bonds as an investment. You don't get a huge return, but some people go and invest in these bonds. But if there's not enough people out there to buy these bonds, then the Federal Reserve Bank will pick up the slack. So if the United States government wants to spend $1 trillion that they don't have spending on whatever, then they'll call up the Fed and say, hey, we need $1 trillion of bonds to be purchased. Now the Fed, again, they don't have any reserves. If they want to buy $1 trillion worth of bonds, what do? Well, they just go to the money printer, print some money, and then they give this $1 trillion that they just printed to the United States government. Now they have this $1 trillion that they can spend. So this $1 trillion gets printed out of thin air. It enters our economic circulation because now the government can spend it, and that also causes inflation because now the monetary supply goes up. Now this is where everybody says, well, no, our inflation is not caused because of the money printing. It's caused because of supply chain issues, or it's caused because of Russia. Well, let's talk about the supply chain issue, because the supply chain issues are not the cause of inflation. Inflation is the cause of the supply chain issues. When the Fed started printing money, this is 2 years ago now, people weren't producing anything. Nothing was being produced. Nobody was working the way that they normally did, but money kept being printed. People kept getting paid. And it's not just people, it's also businesses. So products are not being produced, but money is being produced. People still have money to spend now because the government was getting this money from the Fed and distributing it to businesses and people. Now, money gets spent, products get bought, but no products are being produced. So if you have a whole bunch of people and businesses buying products, but nobody producing products, what's that going to cause? It causes a bottleneck, it causes supply chain issues. Then you got to couple that with the fact that you had the pandemic going on, factories shut down, and then on top of that, the Russia issue happened. So the supply chain issues were a consequence, a side effect of inflation. It's not the cause of inflation. Inflation is what causes supply chain issues, and then the Russia issues just made everything worse. So now here we are, inflation, CPI, is 8.5%. Now this is the reported CPI numbers. I want to reiterate that the actual inflation that many Americans are feeling is significantly higher than 8.5%. The CPI number is a reported number and it's kind of massaged. The biggest example that I can give you of that is in that CPI number is housing prices. But to calculate housing prices, there's no actual looking at home prices or rental prices. It looks at something called owner's equivalent rent. And you might be wondering, what the heck is owner's equivalent rent? It's if you are a homeowner, how much would you rent your home out for? Now, if you're a homeowner, chances are you're not going to know what the fair market value rent of your home is. And so that's how they calculate this housing cost in the CPI data. And what they said is over the last year, the owner's equivalent rent, which is their housing costs, went up by 4.5%. Now, if you look around, again, this is downtown San Diego, home prices have gone up significantly more than 4.5% here. But across the country, the average home price or housing costs, not just home prices, rental prices too, have gone up by almost 20%. If the CPI data reports only 4.5%. So the CPI data says that inflation is 8.5%. The actual inflation that most people see is significantly higher, but now this 8.5% number is getting a little bit severe. This is why the Fed is starting to get worried. So this is why they want to start fighting inflation. The way they fight inflation is by doing the opposite of the things that cause inflation. If the things that cause inflation are cutting interest rates, buying up these assets, then the opposite would be raising interest rates, selling off these assets. Now, the Fed has only started raising interest rates. They did a 25 basis point rate hike. That was 0.25%, and that was what caused mortgage rates to go up to around 5%, and is kind of slowed the economy down slightly because now you have less mortgage applications. It's obviously more expensive to borrow money, and now the Fed has come out and said not only do they want to do a bunch of more rate hikes, but now they want to get more aggressive, meaning bigger rate hikes. The next rate hike is expected now to be double the size as the previous one. This is where people are starting to get worried because now they're saying, well, what does this mean? Because the Fed has always been on the backs of the economy and investors. They'll do unlimited quantitative easing to save the stock market, and they don't want to see the economy slow down. But if you're going to raise interest rates significantly, that's going to slow down the economy because now it becomes more expensive to buy a home. Mortgage rates go up even more, and businesses can't borrow money at the same rates as they could before, so they need to see bigger returns to justify borrowing money, which slows down the economy. So this has people worried. What does this mean for the dollar? What does this mean for the economy? And the Fed is kind of in a tough situation because if you fight inflation, you hurt the economy. If you're fighting a slowing economy, you hurt inflation. And right now, we're facing a unique dilemma where we're on the verge of entering a recession, not caused by the typical economic slowdowns like we've seen happen in the past, but we're on the verge of entering a recession because of high inflation. People can't afford to buy the same stuff as they could before, which could potentially lead to a recession. Now, if that happens, what does the Fed do? How do you fight a recession caused by inflation? You can't just keep producing more inflation. You can't just pump a whole bunch of money into the economy because that's going to make the inflation problem worse. Maybe that's what they would do, but that's the concern that they have. But right now, inflation is becoming a bigger problem, which is why they're getting more serious about it. But this, at the core, forget what the Fed does. We can't control that. But what you have to understand is this is why financial education is so important, because at the end of the day, the person who pays the price of inflation, it's not the wealthy, it's not the rich, it's the poor, and it's the financially uneducated. Now, you might hear that and say, Jaspreet, that's really mean. Why would you say that? But look, it's reality. Inflation is known as a silent tax, and the person who pays this silent tax is the person who doesn't understand what inflation is. Because guess what? over the last 12 months, if you own real estate, you own real estate investments, your property values have gone up. Inflation makes asset prices go up. But if you have been holding on to cash, the value of your cash has been dropping. So if you had $1 million of real estate, that $1 million over the last year has gone up to $1.2 million worth of real estate. But if you had that $1 million in cash, that $1 million in cash now has almost 9% less buying power than it did just a year ago. So this is why it's so important for you to become financially educated, because, well, if you don't, you just become a pawn in the system. And it's very profitable to keep people financially stupid. I mean, the system doesn't want to have people financially educated, because if you are financially educated, then you're gonna say, maybe I shouldn't spend $3,000, or maybe I shouldn't go into debt to buy the $3,000 purse or whatever from Gucci, and maybe I should use that $3,000 to maybe invest in Gucci or some other company or some business or whatever else that it might be. It's a shift in thinking. And so it's very profitable to keep people not financially educated, but this is why you want to be financially educated, because you don't want to be the person that's just making everybody else rich. You want to be the person that's looking out for you, for your family's health, and your community's health, which is why you need to be financially educated. Now, the Fed hasn't started reducing the size of their balance sheet yet. In fact, up until now, the time we're recording this, they're still increasing the size of their balance sheet. In May, they plan on start selling off some of these assets. So you're going to see a big change in things once they start selling off assets, as we start to increase interest rates, because it's going to change the dynamics of the economy. I have some videos coming on that. But what I want to say now is, when it comes to your cash, if you're going to be saving your money, save strategically. Growing up, I was always told that you need to save your way to wealth. Well, the reality is this is not the time just to be saving all of your extra cash. Now, having cash for emergencies, that's smart. This is where, again, you want to save strategically. But just saving to save, not a good idea. If you're saving to buy investments, that's a good idea. But if you're saving because you think that's going to make you wealthy, that's not so good of an idea. So you want to save your money. If you're saving, you want to save it strategically. But just understand that at the end of the day, if inflation is a big problem, savers are the ones that pay the price, which is why you need to be financially educated. That way you can benefit from the way that the system is, because if you don't, then you're going to be the one that's complaining, crying, it doesn't do anything. You want to be financially educated. That way you can make better decisions with your money. That way you can benefit from the way the system is. If you enjoyed this video, here's my video summary on the changing world order that I think you'll love. Thank you for watching, and as always, keep hustling. Start to see more external conflicts between the country that's in charge and the country that's in second place but growing very rapidly. The country that's in second place that's growing very quickly is China, and you're also starting to see more growing tensions